Hey, everybody, welcome back to another fantastic edition of the His and Her Money Show, where we make it our business to help you take dominion over your money and your life. And guess what? We're going to do that once again with today's episode. Speaking of today's episode, don't be stingy. Share this with your friends, share this with your family, put it on your social media. And when you do so, tag us. No matter which social media platform you use, our handle is at His and Her Money. When you show us love, man, we always show it right back. Thank you in advance for sharing, and thank you for tuning in. We know your ears and eyes can be in a lot of places, but because you're hearing us with us, we want to tell you thank you. There's so much news going on right now about different major companies doing what's called a stock split. A lot of y'all have a lot of questions like, is this a good thing? Is this something that I should take advantage of? Or is this not right for me? And we know that you all keep asking the questions. And when y'all do so, we want to make sure that we give y'all good answers. So we have our go-to expert when it comes to this whole stock market game, because for Ty and I, a lion's share of what we do as far as investing in the stock market, as you all know, if you've been rocking with us for a while, is index funds. But because I listen to Kevin just like I want y'all to listen to Kevin. I got a couple of individual stocks because I learned it from him. And so when we have questions like this, that's what we go to. Today's guest, Kevin L. Matthews II, is here once again on the His and Her Money Show to drop some wisdom and knowledge for us all to learn from. So let's not delay this any further. Let's get Kevin on so we can hear his wisdom on the matter so we can make some sound decisions. Hey, Kevin, welcome back to the His and Her Money Show.
Thank you for having me.
We're super glad to have you back because when this whole stock market questions come our way, we just want to make sure we give our people the appropriate answers. And we know that you are trustworthy and we know that you are super knowledgeable. And that's why we have you back here to talk about all this stock split business that is all the rage lately. But some people have not heard your previous episodes and they're being introduced to you for the first time right here and right now. So for them, can you say hello and let them know what you're all about?
Hey, y'all. My name is Kevin Matthews II. I'm a best-selling author and former financial advisor. I have spoken almost everywhere when it comes to the market, and my main job is to make investing simple, make it plain, put it in a language that you can understand, and then take action.
Super dope. And we appreciate the way that you do it because you do it well. Now, there's a lot of headlines all around about major companies. We're talking Alphabet, aka Google. We're talking about just major Amazon is another one. Like these big time, huge companies that a lot of people can't afford to invest in because their stock price share was so high. All of a sudden, are announcing these stock splits, and people are like, "Huh, is this an opportunity for me to get in on something?" And we just want to make sure that we give some sound advice. And so before we get into whether or not it's good, can you talk about some of the recent companies that have announced that they are doing a stock split? And then tell us, what the heck does that mean, Kevin?
Yeah, so this list is growing. It feels like every other day there's another big company that's doing one. But as of today, Tesla is planning to do one. We have Alphabet, aka Google, is doing one. We've got Shopify and then Amazon. So those are the big four so far that are looking to do a stock split. Now, what is a stock split? Basically, it is taking a $100 bill and giving you 520s. They are making their share price smaller and more affordable, even though the company is still worth the same.
So, because you say that it's as if I had $100 bill, and when they announce a split, it just means I have 520s. How do I know whether or not this means that this is an opportunity for me as an investor, or is this no big deal for me as an investor? Is this something that's just rhetoric, or is this something I should be paying attention to?
Yeah, the interesting thing is it's a mix of both, because if I already hold the shares, I really didn't make any money, right? I have more $20 bills. Okay, like I didn't make any money in and of itself. However, what we have seen is that history shows us that when companies split, more often than not, the stock does tend to rise over the next year or so. For example, when we talked about this, what was like in 2020, when Apple and Tesla did that split, from then, from 2020, Apple is up more than 30%, and then Tesla is up more than 135% from the time they did this split. So it gives investors an opportunity to say, hey, look, usually when stocks split, they tend to kind of do pretty well over that next year. So for some, this might be an opportunity.
Yeah, guys, I told you we listened to Kevin. So guess what? We bought some Apple and some Tesla back then because of our last conversation. We didn't just buy for us; we bought some for our kids. Okay, we bought some shares. So if I am, you said if I already hold, for example, Google, this doesn't mean much to me other than now I have more quote unquote shares, but the value is still the same. But if I do not currently own Google, if I do not currently own Shopify or Amazon or Tesla even, and these splits are being announced, what would be your advice to me on how to evaluate as to whether or not this is a moment that I may want to consider jumping in on these companies?
That's a great question, and I think that's the key: is how do I evaluate? Right, a Shopify is not the same thing as Google, and neither one of those is the same thing as Amazon. Right, so this is your opportunity to say, look, of these companies that are splitting, what do I need to know? What is it that I believe about these companies? So what I would suggest is the first thing I do is look and see how well has the company did, let's say in the last year or two. So take a look at it at any chart. You can do this on Yahoo Finance. You can do this on any investing app. Click the little 1 year button and it'll show you this company has made X amount, right? That's the first thing I'm gonna do. The second thing I'm going to do is start to read the news to see how well the company is doing, and then decide if I believe in this company. Do I think they're going to continue doing well, or do I think that their future prospects aren't going to do well, and I'll just stay out of that one.
Okay. And now, do you have some? So you just, as you began your answer, you said that this company isn't the same as that company, which isn't the same as this company. So it's a good idea to approach this single-minded, right? Not just because it's a stock split doesn't automatically mean that this is a great opportunity for me. It could, but it also could not. And one could be a great opportunity and the next one could not. Is that what you're telling us?
Absolutely, absolutely. Every company is different. The economy is different than what it was back in 2020, right? But you know how we approach different foods from different restaurants, right? Like you can get a dollar. It's a dollar menu everywhere. They don't make every dollar menu the same, right? So you want to make sure that you are doing your due diligence and saying, okay, well, yeah, you're doing a stock split, but that doesn't necessarily make you a better company, right? It doesn't necessarily make you stronger. So that's something that you want to pay attention to when you're starting to make those decisions.
Now, how do you become? Because some people they think the stock market and the thought of the stock market is scary. For some people, they've even said, it's like gambling. Some people feel unqualified to be able to make sound decisions when it comes to the stock market. So you've been doing this for a long time, many years. You've helped a whole lot of people get comfortable with the stock market. So for somebody who's like dealing with fear, apprehensive about even doing what you're telling us to do, even from a research perspective, because they feel overwhelmed, what would be your encouragement or your advice to them on that?
Yeah, my advice is if you are a long-term investor, that this doesn't have to be a scary process. You don't need to know a whole bunch of math. You don't need any degrees to do this. And again, for long-term investors, the odds are in your favor. So for example, on average, going all the way back to 1950, that was before my time, but going all the way back to 1950, if you hold a stock for at least 1 year, the chances of it being positive is 79%. That's not bad. But that chance goes up to 89% if you hold it for 3 years, and then you're above 90% when you hold it for 5 years or more. So it's not a guarantee, but those who sit back, buy, and leave things alone, the chances are that you're going to end up on the positive side at the end of the day.
So let's look at these ones that are the major players right now. How is this? Let's start with Tesla because they did one a couple years ago. We got in. I got no I got no regrets uh, about jumping into Tesla a couple of years ago when they did their split. For you, as you pay attention to what they're saying and what's happening, and as of this recording, Elon's trying to take over Twitter. Uh, but like, how are you? what are you looking at, and what have you seen, and what are you thinking when it comes to the upcoming Tesla stock split?
Yeah, so two things. So Tesla still has to be approved by voters. So actually, me and you get to actually vote on whether or not they get to do this split. So we'll probably get an email here at some point. So one, it still has to be approved. We don't know when that date is going to be for Tesla. My concern there is Elon and Twitter. Is he going to take his focus off of Tesla, which is a company I own? Like I need him to keep making us some money, right? So I want to make sure, I want to see where that's going to be, see how much time he is going to spend there. But the other thing that I know everybody is talking about is supply chain issues. Is Tesla going to continue to produce cars better than Ford and GM and Toyota and others that are struggling to make cars? So far, Tesla has been the best in the game at doing this over the last year or so. They just opened a factory in Germany. So I think Tesla is going to do pretty well. My question would be, what is Elon going to be doing during this time? Is he focusing on making cars, or is he focusing on social media and other stuff?
Yeah, man, it's a wave, because now I do want to say that since I've been a Tesla owner, this thing, listen, Elon makes this thing a roller coaster. You got to have a
Yes, it
strong
does.
a strong stomach to be a
Yes,
Tesla shareholder.
absolutely.
Now, next one that intrigued me, because obviously they're huge, and that's Alphabet, aka Google. And I've always kind of, had the thought to invest, but man, that sticker price for one share is incredible. So it's intriguing to me to think that it's going to come down for a new investor as far as a per share price. What are your thoughts on Alphabet? And in particular, I'm curious because one thing that I've never figured out for myself is when we're talking about these different stock splits is, they'll say it's a 20-1 or a 10-1 or a 5-1. When we see that, what does that mean?
Yeah, so what that means when they do like a 20-1 stock split, they are basically taking that share price and dividing it by 20, and then taking the number of shares you have and multiplying that by 20. So going back to our, let's say 20, our $100 example, I guess that would be a 5-1 stock split, right? So we have one share for $100 and now have five shares for just $20 each. So that's what it means. They're going to take it, divide it by 20 on the day that they do that split. What do I think about Alphabet? I mean, that's one of my favorites. That is one of my favorite companies because they do so many things. So one, I'm a little bit biased. One, I do hold shares of Google or Alphabet now. But I was an intern way back in 2011. So I had fun there and really just saw from the inside out how they work. Obviously, they're way different, now than what they were then. But here's the thing: when you look at the most visited sites in the world, Google is one of those, and so is YouTube, both owned by Alphabet. Then you talk about Android phones. Then you talk about YouTube TV, Gmail. Like the list goes on of all the products that they have, Google Maps, all the products that they have, and how they make money from revenue, from advertising. That's how they make the majority of their money. But also, when you look at, again, their Android phones, but also the Google Home, Fitbit, they bought them too. So they're really what I call diversified. They got a lot of different income streams, which I really like for a company. So again, one of my favorites. I've been high on them for quite a while, and similar to Tesla, without the same roller coaster rather. I ain't mad. I ain't mad at it at all.
Yeah. What you just mentioned is something that you teach in your investors toolkit, which is, of course, guys, I can't recommend it enough. I'm somebody who studies this stuff, but Kevin has a teaching style that makes anybody and everybody comfortable. So we'll talk about it a little bit more, but for you all that are like interested in learning this stuff in a deeper way that Kevin is mentioning, go to hisandhermoney.com/investor toolkit, and we'll have it linked in the show notes and underneath this video as well. Trust me when I tell you, it is worth the investment because Kevin makes you comfortable and ready to know exactly how to evaluate a company to figure out whether or not it's right for you. Now, another question I have that people have brought to us is this. They'll see the headline on whatever website they frequent. Amazon is doing a stock split, but they're like, okay, so when? How do I know? Like, when I'll be able to take advantage of it. If after I do my research and I feel like this is a good company, how do you figure out when the shift happens or the split happens and you can jump in if you want to?
Yeah, that's a good question, and it's one of the more difficult to kind of measure. Generally speaking, from the time that the announcement is made and the time the split happens, the stock can be a little volatile. Sometimes it drops, sometimes it doesn't. Usually, you want to kind of get it low if we think it's going to go higher in the future, but again, that's not a guarantee. So my best advice and guidance here is when you complete your research, and if you feel like you like the company, I think you should go ahead and get it at that point in time. Because again, if your research is right and the company is strong, maybe like an Amazon, maybe like a Google, maybe like a Tesla, then given past history and what we think about it, then we think it's going to move forward in time. The other thing too is when you're talking about investing, the longer you invest, the more money you're able to compound. So if you researched it today, let's say on a Monday, but you don't make that investment until a month later, right? That's compounding interest that you could have missed out on. So I think it's more important to take advantage of time. And once you've done your research, invest at that point in time and allow the money to continue to grow.
So even it don't matter like today, right? But pre-split, for example, Alphabet is like $2,500 per share. So you're saying if I do my research and I feel like this is a good fit, I don't necessarily have to wait for the split to happen to invest. If I'm able, I can invest now.
That is correct. That is correct. Because what we have what are called fractional shares. So on most apps nowadays, let's say if I only have $200, I can still own a piece of Google, right? It's not going to be a full share, right? But that's totally fine because if Google grows between now and the stock split, between now and after the stock split, then I still get the benefit of investing. For example, the shares I have in Google, I still don't own a full share of Google yet. I own about a third, but I've been consistently investing in fractional pieces. And when they do that split, whatever fraction I have is still going to be multiplied by 20 or whatever share or whatever split they're going to do at that point in time.
Sweet. Is there any go-to apps for those who are like hearing that for the first time that you like when it comes to the whole fractional share game?
Yeah, when it comes to fractional shares, one of my favorites is Public. I have a link. It's buildingbread.com/public. The reason I like it is because it's educational and it's really, really easy to understand. They have educational videos, very good articles about these companies, and they're a great community where you see other people invest and you're able to learn from them too.
Sweet. Let's talk about Amazon. What are you hearing? What are you feeling? What are you thinking?
Yeah, Amazon is one that's a little up in the air for me. Amazon over the last year had not really done well. We're talking like if it was positive, it may have made you 1 or 2%, which isn't great because inflation is high, right? Gas prices are high, and I'm gonna need Amazon to make me more money than that. So that's one issue. But that one's I'm like, I'm not really sure. The other thing too is they did switch CEOs from Jeff Bezos to someone new, and it just has not paid off yet. It's been a year, so it's still early in the job. But that one, I'm on the fence for that one. Like Google's an easy yes for me. Amazon's like maybe we'll kind of have to see.
Yeah. That's interesting because I think that was what people were saying when Jeff Bezos stepped aside and hired a CEO, that maybe this would be the door that could lead to a potential stock split, which Amazon has never ever done before. So now here we are. So it's just something we got to keep an eye on. It looks like.
Definitely. So for me, like I do own shares of Amazon, but I've had them for a while. Personally, like this doesn't make me want to jump into it. But it's just, they're doing a lot. Like they're spreading themselves thin. They got a streaming service, they got cloud, and then they have like the 2-day shipping, right? So I think they need to like focus Amazon and figure out what you want to do well and then continue to do that.
Cool. The fourth one, I think, is the most recent one, was that of Shopify announcing a stock split. Now they're not of the same size as these other three companies, if I'm correct. So, what is going into your mindset as you comb through what Shopify has going on as to whether and what type of? I didn't get a chance to see like what type of split it is, the ratio and all that. So, since it's so newer than the other three that we've talked about, What exactly is Shopify offering?
Yeah, so Shopify is a real interesting case here because the reason, like usually a lot of companies will come out and say, look, we're splitting for this reason, to be more affordable, to be, traded a lot easier for our investors. That's what most companies say. Shopify did not say that. What they said is they want to protect the voting rights of their CEO. And the reason why I think this is important is because you see how Twitter, Elon Musk can just come in and buy Twitter and make a lot of noise. Well, Shopify is saying, look, we're going to do a split, make it more affordable, but we're going to make it easier for our CEO to retain power, to protect it from someone coming in and buying and really making a lot of waves. So that seems to be the primary motivator, which is a little concerning to me. But the other thing about Shopify is this. Shopify has been down over the last year more than 30%. So they've actually lost a lot of money. And to me, it seems like they're doing this split to kind of boost and get more interest into the company as opposed to doing it to make it cheaper and continue on their way.
So then that goes to the thought of, the I guess the soliloquy or the colloquialism out there is to buy the dips. And so you're saying Shopify, if they're in a bit of a dip and they're doing a stock split. Is that a good thing to buy low?
I mean, there's a difference between a dip and a crash. So this one, at least right now, like you have to pay attention to the environment. And right now in 2022, as of this recording, at this point in time, most tech companies, not all, haven't really done all that well. And I'm not sure if Shopify is going to be the one to turn it around. Like I think Amazon's on a dip. It's not down that much, right? I could see that. That makes sense. Shopify, I feel like they've got a little more work to do. The split may help them. I think it could help them. But when you're down that low, I don't know, man. You gotta prove it to me.
For sure. Listen, guys, I'm telling you, Kevin, he shows you how to use all these cool charts on Yahoo Finance and all this stuff to make your evaluation process a little bit smoother, man. Please go to hisandhermoney.com/investor toolkit. I'm telling you, you don't have to be scared and you don't have to be ignorant when it comes to investing in the stock market. Kevin's information is sound and he is a very, very good teacher. Matter of fact, Kevin, can you tell people more about what they'll find over there in Investors Toolkit that you created?
Yeah, so the Investors Toolkit is what I call the simplest investing course on the planet. I make sure that I break down every single piece from beginner level to medium to expert so that you can take action and have confidence in your investing strategies. And for those that may not know, one of the reasons why I feel gifted and called to teach is because before going into Wall Street, before managing $140 million in investments, I started as a math teacher. I was a seventh grade math teacher in Dallas, Texas. And everything that I learned as a teacher helped me to educate people about the stock market in a way that you can understand, in a way that is not intimidating, and most importantly, a way that you can use and feel empowered by the market. So that's what we teach in the Investors Toolkit. I break it down in 7 steps that anybody can follow. And again, the link and everything is in the show notes.
And so, as we get ready to conclude, is there anything that we also need to write down in our notes when we are considering stock splits, when we are considering whether or not a company is in the position with their stock split to be of value to us that you would definitely want everybody to know before they leave this episode?
Yeah, I would say to go and look at the history of the company. There are some stocks like Apple that did it before. Go back and see how they've done when they've split in the past. That's not going to necessarily predict the future, but it is going to give you some clues. It is going to give you some understanding on what may happen and how things will react. The other thing, and this may even be more important, is when a company splits, like we talked about Apple, we talked about Tesla, it doesn't mean it's going to go up 135% tomorrow, right? It also doesn't mean that it's going to go up in a straight line. Because I remember when Apple did this split, said it dropped. I'm like, that's okay. Like we're long-term investors. We're talking a year. We're talking 2 years, and those things tend to pay off. So do remember that. It does not mean that it's an overnight success. It does not mean that you're going to be rich tomorrow. But for good companies and long-term investors, things usually end up going well in your favor.
And can you do us a favor? Can you talk about real briefly your philosophy, because what I love the most about what I learned in the Investors Toolkit was how you have a balanced approach between index funds or ETFs and individual stocks. Because there are some out there who just say index funds are bust or individual stocks are bust, and you have this blended approach. So, can you talk a little bit more about your philosophy and how you approach all this? Because we're sitting here thinking about stock splits, which are individual stocks, but I have some index funds. So am I doing the right thing? Some people may be questioning, putting that together.
Yeah, I think the most important thing is there is no one one only way to invest, right? Like there are multiple ways and multiple flavors to do this. You got people who only do real estate and do quite well, right? People who only do index funds and do quite well, and then some people who do individual stocks. So my job is to help you to decide what blend makes sense. And the most important thing for me, especially, and the thing that I noticed as someone who was an advisor and started to understand these things a bit deeper, is you do know that the majority of your index fund is already in, right? Apple, Microsoft, Google. So my thing was, okay, well, if my index fund already trusts some of these stocks, I might want to own just a little bit more, right? I may want to own these on the side, and I may be able to enhance or help to bolster my index fund. So that's one way that you can look at it. And then the other way is, you want to try and engage and see, what do you like, right? Like you might like investing in individual stocks a little bit more. That's okay. And then some people may not want that responsibility, may not want to do that level of research, and that's okay too. So for me, it's finding that blend and try to do the best that you can and get the most out of the market as possible.
Dope. And you also are an author. You have a new book that you just wrote. So can you tell us about that and where we can find a copy of it?
Yeah, my latest book is From Burning to Blueprint: Rebuilding Black Wall Street After a Century of Silence. I'm a native son of Tulsa, Oklahoma, and that was the home of the original Black Wall Street in the 1920s. So in the book, I talk about the history, what happened during the Tulsa Race Massacre, but also how do we rebuild wealth? What is the plan, the strategy to overcome events like that? And how do you build wealth in this context, in this century, right? Using investing apps, using all the tools that we have today so that you can set yourself and your family apart and create generational wealth.
Super dope. We'll be sure to have Kevin's book linked in the show notes of this episode as well. And if people want to keep up with you and all the advice that you give on on the internet, what's your handle?
Yeah, you can find me on all things social media at Building Bread, YouTube, Instagram, Public, TikTok, Facebook, literally almost anywhere. You can find me at Building Bread, and obviously at buildingbread.com.
Kevin, we can't say thank you enough, man. Your advice is always sound, and we appreciate you coming, helping us understand this whole stock split game a little bit more. Well, there you have it, ladies and gentlemen. Another fantastic edition of the His and Her Money Show is in the books. We hope you took good notes, because Kevin dropped some good game and some awesome gems. Now you have the knowledge and you have the insight to do your work when it comes to figuring out if these stock splits and even stock splits to come are right for you and your portfolio. So now go do the work. Remember, we're here to help you take dominion, but dominion has to be taken. It won't be handed to you. So now the ball is in your court. So go out and be great. Remember, we got episodes on top of episodes just like this over at our website, hisandhermoney.com. That's all we got for this time, guys. It's been great. Until next time, peace.